Markets are one-week highs on the Indian currency on the back of dollar selling by two foreign banks in India and also a weak dollar index which has been supportive. So 4/10% of a gain coming in on your screens. Vijay, what's your sense on the Indian rupee right now? I mean, we have seen it trading within that range of 60.80, 61.20. It really hasn't moved beyond.
Absolutely, Manisha. And you're also seeing the intraday volatility on the USD INR. Of course, the other pairs also going down, barring the JPY INR, which again is unfortunately not as liquid as the other currency pairs, which is showing signs of volatility. But where the USD INR is concerned, it's very clear that the 61.90 to maybe 62 level is acting as a very critical resistance for the bulls, the US dollar bulls, to take the currency past. Now, the scope for appreciation also remains fairly calibrated. I think the 60.75 levels on the spot segment would act as a fair bit of resistance for the rupee to overcome. So I still hold out my view that before 31st March, there is a possibility of a spike in the USD INR, but I'm willing to admit that that rally might just be a lot more muted than I expected earlier. I'm not willing to write off the possibility of one last spike before 31st March on the USD, but probably I would be far less bullish in terms of exposure of quantities on the long side than I had about a week or 10 days ago.
Fair point. Let's also get in then Satyajit Kanjilal, who is CEO of ForexServe, and he joins us on the show as well. Mr. Kanjilal, hi. How are you checking on the Indian rupee at one-week highs, especially ahead of the FOMC meeting?
Hello, Manisha. The rupee obviously is taking its cues from both the domestic considerations as well as the global underpinnings. And we see that the domestic situation, since we over the last, let's say, a few months, has improved considerably, and that has taken the risk premium off the rupee. And we see the flows are being quite free and easy of late, and we've seen flows into bond markets, stock markets. And that, I think, the trend is likely to continue into the election period and well beyond March as well. So having said that, we look at the global markets, we find that the market there is, trying to figure out what's going to happen in the Eastern Europe with Crimea, with the Federal Reserve today having its Fed meeting, which will be the first for Yellen, and she likely to continue with the tapering that has been in place for some time now, but the guidance would be looked at very closely. Europe overall is not admitting to the deflationary conditions, so that has been a boost for the euro, which is at very strong but a critical level under 140. So the markets are not able to make out the direction of the longer term as one could see. But the point that one is taking from all this is that the rupee is being supported against a strong euro, and globally the dollar being weak at this point of time. So that might change going forward, but for the moment at least the rupee is going to remain strong. And I think 60.80 could be again tested, where we've seen good demand, possibly from the central bank, which may not want the rupee to strengthen for any length of time and become uncompetitive vis-a-vis the yuan and other currencies which are also weakening at this point of time. So therefore, we have a fine line to thread actually at this point of time between 60.80 and 61.50 as one sees in the market.
Mr. Kanjilal, how would you look at the road ahead then? Because the emerging market currencies, of course, have been jittery. We also are looking at the dollar index, which has been under pressure. What kind of cues will the rupee get from there?
For example, today the FOMC could very well toe the line, but the guidance could suggest that if the unemployment rate, as we have seen, has improved, and the labor conditions in the U.S. generally are improving, growth is also picking up. So there could be some guidance which might say that the conditions for improving or increasing rates may be tweaked a little. So that might give the market some sense that the rates might go up sooner than expected. So that will help the dollar. By and large, I feel it will be U.S.-centric markets going forward in the next month or half, which will make the markets take a call, whereas the rest of the world seems to be slowing down to a great extent, especially China. So therefore, the cue, I think, will come from the U.S.
So what's your sense in the near term and the longer term then for the rupee? You said 60, 80, 61 and a half perhaps is the near term level for the currency, Mr. Kanjilal. Going forward, what kind of a range would you give it up to elections?
I think if 60-80 holds, which is what I believe it could, given the fact that there have been several attempts to breach this level and it has been supported rather mysteriously by strong hands, if you want to call it that. But if that is going to be the case, in that case, I think if the bottom is sealed, the upside for the dollar could be seen. So, like 61.50 to 62, it could be the range that could be tested, I think. But there again, there is strong selling interests for the dollar as well. Exporters who want to see that if there is a single-party victory in the elections, they would be worried that the rupee could, rush towards 58, 59. So they want to tide over that situation as well. They want to hedge against that. So therefore, they will be selling. So as I was saying, that between 60.80 to 61.50 to 62 would be more or less a range that the markets would like to hold and not bet on any one side very strongly.